Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have in store for this upcoming week that might impact stocks and bonds. I'm Scott Nasca, president of Generation Capital Management. Mixed market last week as the Dow Jones was down 1.2%, the S&P 500 was down 0.8%, and the Nasdaq was the winner of the three major indices that was up just 0.1%. So a little give back in terms of what's been a pretty good quarter so far for stock markets. We did have the earnings come out last week, which once again provided some upward pressures on stocks. Apple came out with a better earnings report, so we had a few of the bigger mega cap tech companies over the last few weeks that did come out with better than expected earnings, or at least the markets took them as positive and moved them up. So, the market is right now being driven by the larger cap stocks out there, as we saw in 2019 and 2020. So just keep an eye out for that, because we do like to see a broadening of stocks participating in the upward moves. There are still some uncertainties out there with the financial stocks, especially the small regional banks, and that put pressure on the Dow and the S&P last week, which has more financial companies in it than the Nasdaq. So you can see why there was some differences amongst the three different indices that are out there. The two-year Treasury currently is at 3.97, the 10-year is at 3.49%. So we have basically about a 48 basis point inversion still that's out there, slightly lower than it's been over the past few weeks, but still an inversion. And as we've talked about before, inversions in the the yield curve, where the short end is yielding higher than the long end, will lead to usually economic slowdowns and recessions. So the market is factoring that in as well. So pay attention to that. We just still want to keep an eye on that and see if we see any improvement out there. We do have data points coming out this week that can move markets. We have the CPI inflation data coming out on Wednesday, the PPI coming out, inflation data coming out on Thursday. We have jobless claims on Thursday, as well as what consumer sentiment on Friday. So pay attention, especially to those CPI and PPI numbers, because it's something that the Federal Reserve is going to pay attention to as they determine their interest rate policies going forward. The Fed did come in last week and raise interest rates by 25 basis points, but they are still citing higher inflation numbers out there that's really keeping their foot on the pedal for raising rates. So you want to see any slowdown in inflation numbers, because that might give the Fed the ability to pause or reduce rates going forward. But pay attention to inflation, because it's a hot number out there. We also have this is the last biggest week for earnings that are coming out. We've had some good earnings over the past few weeks that have helped propel the markets, but pay attention to the rest of the earnings that are coming out. It'll give a true indication in terms of where the consumer is in quarter one, and see if you can see any guidance coming forward with a lot of companies for the rest of the year. Not many are providing a lot of input, because I think they're uncertain in terms of where their business is going to be on a go-forward basis. If you have any questions, feel free to reach out to us. Our website, www.gencapmgmt.com. We have a lot of information out there. Look at John's top tips for financial planning. We're ready to answer any questions that you might have. If you'd like to give us or let us provide you a second review of your portfolios, be glad to do that as well, to make sure you're, basically how they're allocated meets your goals and objectives and risk tolerances. So our team is ready to answer any questions that you might have. Once again, my name is Scott Nasca, president of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.